one of the crucial points about buying a property, and British people don't necessarily think enough about it, is the hidden cost of the exchange rate. One of our previous panelists referred to how since Brexit, the exchange rate is unhappily drifting negatively in terms of sterling and euros. But it's very important that you think carefully about that. And so we've invited one of our chamber members, Prem Raja from Currencies for You, to come and just talk us through briefly how you can think about exchange rates and why a currency broker can help you. Prem.
Good afternoon, everybody. Can we all hear me at the back? Okay,
yes.
Perfect. Okay, thank you, Christina, for the introduction. I'm Prem Raja. I'm the head of the private client division at Currencies for You. Hopefully you're all enjoying the seminar so far and refreshed after the break. First and foremost, I'd like to thank Christina and the whole team for organising the event today. I think you guys have done an amazing job, and I think they deserve a round of applause, please. So before we get started, let's just do some audience participation to see who's still awake. So who here, by a show of hands, has had to make an international money transfer before? Okay, so most of us. Now, I'm going to ask you another question. Some of you are going to think I've maybe lost my marbles a little bit, but who here, just by a show of hands, would buy a property without knowing the price of it? Okay. Now, the reason I ask this question is because on a daily basis, we hear that people are going to buy properties abroad without even considering the exchange rate. I hear it all the time. People will say to me, we'll talk about the exchange rate, but that's a secondary factor. We need to find the property first, which I do understand because, of course, you need to know that you want to buy the property first. But I always do recommend monitoring the exchange rate while you're on the property hunt because you can always stay on top of your budget that way. But if you do buy a property overseas, the one thing that we do stress the importance of is that there is going to be a completion time frame, and that's going to be anywhere between 3 to 6 months. And if you haven't fixed an exchange rate yet, in that 3 to 6 months, the price of your property is going to be constantly fluctuating. And that will bring me on to my presentation today. So a little bit about us. Currencies for You, we were founded in 2009. I've personally been in the business for over 10 years. I think it's been about 13 years now. We have 5 international offices throughout Europe, with one of them being in Portugal, which is in Almansil. We currently transfer the equivalent of $350 million per annum, thus saving our clients the equivalent of anywhere between $10 to $15 million per year. That's something that we're really proud of. We've also scored 4.8 stars out of 5, so yeah, there is room to argue that it could be 5 on Trustpilot, and 98% of our clients are happy to refer us, so hopefully we are doing something correctly. So, why use Currencies for You? For those of you that are aware, there are plenty of options for transferring money out there. So why use us? It's transparency. So first of all, we offer close to mid-market rates, which in comparison to a bank saves you around 5 to 7%. And this applies across all amounts. So whether our clients are transferring £1,000 or £1 million, they're always going to make great savings. Now, the reason we're actually able to do this is we buy directly from the market and work on very, very tight margins for our clients. As a company, we work on a high turnover with a low margin basis. And this way we can pass on all of our savings to our clients. And that way we have full confidence that they will be able to come back to us and hopefully refer us to family friends as well. No transfer cost is pretty much what it says on the tin. Typically, a bank will charge you anywhere between £15 to £40, depending on who you bank with, for a transfer overseas. With us, all of our transfers are completely free with no hidden costs or charges on top. And the transfers are also same day as well. So if we transfer funds to Portugal right now, we can have the funds there in about 50 to 60 minutes. Now, the most important point here, though, is how safe is your money? So we're a fully FCA-authorised institution, which basically means that all of your funds are held in segregated client accounts, which are also in your name as well. But what that means is that, obviously touch wood, this doesn't happen, but in the event that our firm was to go into liquidation, then your funds are completely separate from that, thus meaning they're completely safe. And that guarantee is across all amounts. It doesn't work like the financial compensation scheme, which only works up to 85,000. Now, personal relationship manager, this isn't something that we just say. Each of our clients at accounts opening is assigned a personal relationship manager. who is there from the moment you open the account to the moment your money lands on the other side. It's something that we really pride ourselves on because all of our clients have a dedicated analyst who watches the market for them and can inform them of any movements that are relevant to your transaction to help you save more money. So for those of you who said that you'd make an international transfer before, just by a show of hands, who are familiar with the term spot and forward contract? Okay, a couple of us. So for those of you who don't know, there are two main ways that you can buy your currency. The first is called a spot contract, and this is essentially where you buy now at today's exchange rate and you're given up to 2 working days to pay for the currency. But let's talk about forward contracts today, and there's a reason why this is so relevant. If you think about what I said in the beginning about the buying process and when we buy a property overseas, we do have that time lag when you see the property and fall in love with it to the completion, which could be anywhere between 3 to 6 months down the line, which also means 3 to 6 months worth of exposure on the market. So how can we potentially eradicate this? This is where a forward contract comes in. So effectively what you can do is you can lock in today's exchange rate for a maturity date in the future. So you can fix today's price with a small deposit, generally 5%, to pay when the property completes in 6 months. Therefore meaning you now have no risk whatsoever. So if the pound-euro rate were to dip to 102 after securing 114 today, it will make no difference to you. Now I know what you're all thinking. What happens if the market goes up? And of course that is a disadvantage to this. But to be clear, when we look at forward contracts, we're not doing it to gamble on the markets to try and get an extra couple of percent. It's about guaranteeing the cost of your property in sterling so you have no nasty shocks if the market moves out your favour. And for those of us in this country, we've seen quite a few events of that, especially even over the last 4 weeks. And that's how I asked the question in the beginning about who would buy a property without knowing the price of it, because the whole time that you haven't locked in an exchange rate, once you've committed to buy the property, you are subject to fluctuation, which means the cost of your property is going to change by the second until you've confirmed the exchange rate. Market analysis is something that we do pretty much just goes hand in hand with what we do with your personal relationship manager. They're there to watch the markets for you. So if the market's moving, it's jumping up or dropping, you've got somebody that's constantly watching the markets for you and can keep you up to date, whether it's by phone, text, or email. We also do have an online platform as well where you can buy and sell your currency 24 hours a day, 5 days a week. So if you are listening to me now and think, I don't actually like the sound of this guy's voice, you are able to buy the currency online instead. So for those of you who aren't familiar with the difference in exchange rate between a company like ours and a bank, we always frequently sort of do mystery shots, and the most latest one we did was earlier this month. So for those of you who can't see the numbers, I'll read them out to you. We did a comparison on the purchase of 500,000 euros, and the exchange rate with us on the day was at 1.1386, so 113.86, with no extra costs. So the cost in sterling with us on that day was £439,135.78. We then shopped around on bank rates, and the best we could find was from a Premier account, and that exchange rate was 108.17. Which meant that the same 500,000 euros was costing £462,235.37, which is an extra £23,000. And to top it all off, there was a £25 transfer fee as well. And that £23,000 that we save, I'm sure, first of all, is a lot better off in your pockets, or at least being spent furnishing your new property. Think of it as a gift from Currencies for you. So as you can see, before we even look at the analysis on the markets or even look at any strategies, just on the exchange rate alone, we make a sizable difference against the banks. Now, on top of getting you a better exchange rate, what we really pride ourselves on is our analysis and strategy services, which is generally not something that you get with a high street bank. I want to show you this graph as it's very relevant to what we're speaking about today. And if you just ignore the numbers for now, you'll see the top corner on the left where it says limit order. That is where the pound-euro rate was in May of 2017. If you now look in the bottom right corner where it says completion date, this is where the market was by September of the same year. And as you can see in that time, there was a staggering drop, which fortunately did pick back up a little, but the variation from top to bottom here is around 12%, which is massive. Now, what I wanted to show you is how market analysis really comes into play and how we use financial tools to protect our clients' exposure. So imagine you're in the process of buying a €500,000 property. The completion is due within 6 months, and you want to try and minimize your exposure as much as possible to the market. There's quite a few different financial tools that we have in place to help here. The first is something that's called a limit order. Now, a limit order is essentially where you pick a rate higher than the current market price, and they will purchase at that price if it triggers it. So in this example, the rate at the time is at 117 for us. And we're saying we would like to try and achieve 120 because it'll be nice if the market gets it, it'll save us a lot of money. So we can put the order in at 120 for you. So if the market reaches that price at any time, even if it's at 3 in the morning, your currency will be automatically purchased at that price. Now, the second tool is something that's called a stop loss. This is when you pick a rate lower than current market price as an absolute worst case scenario. So let's just say again, the rate's at 117. You've picked 120 as your higher price, and you decide that 115 is the absolute lowest you're willing to go and will still keep you in budget. So what's the advantages of this? If we see a spike or a drop in the market, these orders will kick in for you, even if it's at 4 or 5 in the morning. So if the market were to drop to 110 overnight, which has happened before, your stop loss will kick in at 115 automatically. Another advantage that you now have is you have a guaranteed best and worst case scenario on the market. So you now know exactly what this property is going to cost you in sterling, no matter what happens. Now, if you look back at the graph, you'll see what happened on the exchange rate if you just decided to do nothing and wait until completion date to transfer the funds, which is a risk that many people take. So let's go over the costs. If we got our ideal rate at the limit order of 120, that £500,000 was costing us 416,000 in sterling. Now let's say we didn't get lucky and it only hit our stop loss, our worst case scenario. It was then going to cost us £434,000, £782.61. However, if we decided to do absolutely nothing and just wait until completion, then that same €500,000 would have costed us £462,962.93, which is an extra £46,000, which is pretty much the equivalent of the deposit that you pay on a property, around 10%. And that's exactly why we're educating people here to say, look at your currency exposure and don't leave yourselves open, because there are financial tools available to help you and protect your budget. Now, I'm sure we're all aware of the mini budget announcement around 4 weeks ago and what transpired after it. But I wanted to just show you a quick visualization of how the markets can move. So before the announcement, the pound-euro exchange rate was trading at around 114.50. Within an hour after the Chancellor's speech, we'd already seen a drop down to 111.50. By Sunday evening, during Asian trading hours, we saw a flash crash down to the 107 area on the pound-euro exchange rate, which fortunately was quickly recovered, as you can see, due to the Bank of England announcing its gilt buying plans. But after the intervention had begun, we then find ourselves back at 114 again, and even today, the exchange rate stayed in the 114, 115 area. Overall, this move was around 6% from top to bottom. And although this was an exceptional move and it's not something that you see every single day, it does go to show just how sensitive the market is and how your budget can change within just hours. So how does using a currency broker work in practice? So first of all, we open an account for you, which is free to do. That doesn't tie you into using us. It doesn't mean you're going to be bombarded with emails and calls. It just means you have the facility open. So if you like the exchange rate at the time, you can take advantage of it. Once the account's open, you'll be introduced to a relationship manager and the dealing desk, who are available via phone and email to assist you with creating a strategy for your purchase. And when it's time to do the exchange, we'll agree an exchange rate when you're ready. You'll then pay for the currency purchase, and then it's been sent on a same-day payment to your beneficiary account. You're also provided with a transfer confirmation as proof of payment. Now, I wanted to leave this here as an outlook for what we're looking at next on the market. And unfortunately, due to one of the events today, we now have an answer. This was written 2 weeks ago. So we, of course, have rising inflation and rising interest rates. and how that's going to affect the British economy. It's something that doesn't seem to be stopping anytime soon. Inflation keeps rising, which will mean the Bank of England is going to still be incentivized to keep putting up interest rates. So that will be one thing that affects sterling quite a lot. The Prime Minister, of course, she didn't manage to hold support within her party and has now resigned. So the next question is who will take her place? Labour are up in polls at the moment. Will there be a snap election called? Right now, I've seen that Keir Starmer's calling for a general election. It comes down to the next leader of the Conservative Party and whether they would choose to move forward with that or not. UK housing market, one of the main ways that we measure the strength of an economy is always the housing market. Right now, rising interest rates has started to affect house prices a little. What's that going to mean for the housing market in the future? Currently, the Bank of England has forecast a recession for Q4 of this year. And what would that potentially do to the markets? Generally, the feeling is if you do see a recession, the pound would potentially weaken on that. You still have soaring energy prices. One of the main points right now is the dollar. The dollar is still strong. In fact, it's still the strongest currency out of the G10 right now. And that's because the Fed is still raising interest rates out there, and it's a pretty risk-off environment. So it really comes down to when the Federal Reserve decides to now stop raising interest rates, and that's when we'll be able to see a reversal on that. And last of all, we have the Russia and Ukraine war, which is still causing a lot of uncertainty in the markets as well. So as you can see, over the next at least 12 to 18 months, we still have a lot to consider, and that's without all of the other variables that will potentially come out as well. So time is money. What can we do about it? Come and speak to us today. You can open an account with us or book an appointment to either speak with myself, one of the experts that I brought along with me. At the very least, start considering your budget now, even if you haven't found a property. And lastly, if you would like updates on the current landscape and how it's affecting the market, then please come see us to find out more about this service and how you can start receiving the reports right away. I'm Prem Raja. Thank you very much.